This is Market Wisdom for Traders, episode 14, delivered by Epi14 for stock traders, forex, options, equity, futures, bonds, and all chart-related trading. You're advised to subscribe. You can consult us for account management, training. We're available on 234 80 375 97085, or you can email us on atwegbeehizogi@gmail.com, or contact us via Facebook. It is always the exceedingly small minority of your friends, brokers, or advisory services that are successful enough in the market themselves that merit your consideration for good information and advice. Individual investors worry too much about taxes and commission. Your key objectives should be to first make a net profit. One of the great advantages of owning stock over real estate is the substantial lower commission and instant marketability and liquidity. This enables you to protect yourself quickly at a lower cost, or to take advantage of highly profitable new trends as they continually evolve. The multitude speculates in options too much because they think it's a way to get rich quick. When they buy options, they incorrectly concentrate entirely in short-term, lower-price options that involve greater volatility and risk, rather than in longer-term options. The limited time period works against short-term option holders. Many option holders, speculators, write what are referred to as naked options, which are nothing but taking the great risks for a potentially small reward, and therefore a relatively unsound investment procedure. Investors are usually influenced by things that are not really crucial, such as stock splits, increased dividends, news announcements, and brokerage firm or advisory recommendations. 80% of brokerage firm research is written on the wrong companies. There is insufficient screening to determine which reports should actually be written. Another problem with Wall Street research is that it seldom provides sell recommendation. In the most general sense, trading success requires three basic components: an effective trade selection process, risk control, and discipline to adhere to the first two items. You should only buy stocks that are within a few percent of their basis. Otherwise, the risk is too great. All those books concerning the markets are good, but you learn the most from the market itself. Every time I buy a stock, I write down the reasons why I bought it. Doing this helps cement in my mind the characteristics of a winning stock and help me learn from my mistakes. The more discipline you can get, the better you are going to do in the market. The more you listen to tips and rumors, the more money you are likely to lose. A lot of the stock I buy have already doubled and tripled before I buy them. That shows me there is something very unusual going on, And if the situation is that good, a doubling may just be the beginning. It is probably going to double again. I cut losers very quickly. The maximum loss I allow is 7%. I make my money on the few stocks a year that double and triple in price. I usually hold my big winners for about 6 to 12 months. Stocks that aren't that strong about 3 months. And my losers less than 2 weeks. I usually wait until the stock runs up, use another base, and then break down. That is when I liquidate. You can tell breakouts, tell breakouts from whipsaw by the volume. If the volume doubles one day and the stock moves to a new high, it is telling you a lot of people are interested in the stock and buying it. This brings us to the end of today's episode. Remember to subscribe, likes, and ask questions, and contact us for account management or training. Thank you.